Inflation. It all started in March 2020. Inflation is caused by too many dollars chasing too few goods. In April 2020, the problem started with too few goods. The United States shut its stores, businesses looked around, and they thought that nobody would have money to spend. So they canceled their future orders. They stopped their manufacturing lines. They turned away shipping because they didn't want to spend their precious money that they thought wouldn't be coming back to them. Fitness equipment, soap, TVs, rollerblades. This was exacerbated by ports closing, which meant that all the things that had been ordered somewhere else were just sitting on docks waiting to be shipped. Of course, within a few weeks, people had tons of money and they had time. They wanted stuff. They wanted TVs. They wanted rollerblades. They definitely wanted fitness equipment. They had money. It was being dumped into their bank account so they could pay for stuff. This was the first side of the inflation equation, a supply shock, which is usually reserved for natural disasters, tornadoes, tsunamis, where all sorts of manufacturing and goods are destroyed, but people still have money. In this case, supply was out there, but we couldn't get it where it needed to go. And people had lots of money. Not enough supply, tons of money. Too many dollars chasing too few goods. But wait, it gets worse. Because with all of this money, normally we would spread it around on many different goods and services. But since everybody was home, nobody was using dollars on gas or going to the restaurant or the movie theater. We were all trying to buy the same stuff, which put very distinct pressure on certain parts of the supply chain. This is almost certainly why stock and crypto prices went through the roof during the pandemic. We had less things to spend money on. Stimmy checks into the bank account, stimmy checks into the stock market, because you weren't going to watch the Knicks at Madison Square Garden. You were sitting at home on your computer watching the charts go up and down. We keep seeing this rolling focus on the supply chain. First, it was toilet paper and food because everybody was cooking at home. Then it was fitness equipment, Peloton and weights. And then it was cars because people still need to move around, but they didn't want to take public transportation. And now that COVID is finally really starting to wane, we're seeing it in ticket prices and we're seeing it in oil and gas because the vast majority of the world is about ready to travel. This is why the Russia-Ukraine war is such a problem for the rest of the world right now. Demand, that focus is shifting towards travel, which requires oil and gasoline. So removing Russian oil and gas from the supply chain is a guaranteed way to spike inflation. Follow for more must-know market concepts.